The bottom line is today, obviously, there's a lot of fears when it comes to the stock market, and we saw a huge sell-off. Should people be concerned watching what's happening?
Absolutely. So you've got a combination of markets getting worse and you have inflation still increasing, which is the worst possible combination. It's the perfect storm.
So what does this mean for the consumer? Inflation definitely is not cooling down. So what can we expect in the future?
As consumers continue to go to the grocery store, put gas in the car, and notice the prices just continuously increasing, energy prices going up as far as their power bill, water bill, and then rates also not coming down, interest rates, whether it's on car loans, credit cards, or even mortgages, those are going to stay and remain high. What this all boils down to is we're getting to what some would call stagflation, where essentially rates continue to stay high and prices continue to go up. And a lot of that to do from the money that was printed a couple of years ago.
So what can the average person do right now? Obviously, if you have money, do you suggest investing in the stock market, or is it better to hold on to cash because cash is king?
So the best thing that anyone can do is call whoever's managing the money. So if they have a 401k or if they have funds that are invested, they're going to want to call that money manager or that financial advisor and get a plan put together for good or bad, because there's going to be some key reports that come out tomorrow. There were some that came out today, but there's some key reports coming out tomorrow that if they come out negative, it's going to really impact the market even more than what it did Monday.
And what are those reports that we're looking at?
We're going to see reports come out as far as retail, jobs, other consumer inflation reports that are in more specific sectors, as far as like energy and auto, mortgage applications. Essentially, these are the monthly reports that come out and tell us, hey, what's the pulse on the economy? Is it getting better or getting worse? This is the reports that the Feds look at the Federal Reserve to see what they're going to do with interest rates. But there's going to be a lot of telling information coming out tomorrow.
And I know you mentioned that Goldman Sachs is sounding the alarm.
Yes, Goldman Sachs essentially downgraded the United States economy projections, coming from a 2.4 down to 1.7%. What that translates to is essentially they're forecasting it's going to get even worse than it already is. With Monday being the worst day in the stock market since the year of 2022, it getting worse only means it's going to cost you thousands more.
Well, here in Las Vegas, we've been through a lot. We've been through the great downturn back in 2008 to 2009. We saw our housing market collapse, and now homes are just sitting on the market. People aren't
Yes,
buying.
it's still a relatively healthy housing market, and it's healthy because there should be 12 to 13,000 homes in the market. There's about 6,000 still, so it's still half. So in every recession that we have, it's usually a different sector. 2008 was housing. 1999 was the dot-com bubble, and whatever's going to cause it this time around, it's going to probably be a different sector. It's probably not going to be housing. So housing isn't so much the worry here. What the worry is if you've been working on your retirement, which so many Americans are short on, this is going to get cannibalized depending on how these next few weeks go. And so not having a plan and not knowing isn't good enough. If you are one of those people that just wait for the 401k statement to come in once a quarter, okay, how's it looking? That's where you're going to get hurt seriously. And those are the people that really need to call whoever's managing their money to say, hey, what's my plan? Good or bad?
The president made some comments over the weekend in regards to the economy, and Monday just turned out to be a really big sell-off. And then today, more people are selling off in the stock market. Um, so what is I know it's nobody has a crystal ball, but what is your prediction moving forward and throughout this next year?
So we've been on a rally year after year, meaning the markets have just been doing better and better. Housing prices have been going up. The Dow has been going up. Everything's been doing great. Well, eventually you hit a peak, and eventually that makes a U-turn. And unfortunately, that's the start of the new trend that we're going into is on the downturn, and it's going to continue for a little bit. It's continued for almost a decade at this point, since COVID, from 2020 to 2025. It's been 5 years of pretty good news. There's going to be a couple of years of bad news, and people need to get ready for that new trend.
I don't think people are ready for that new trend after we've had 5 great years.
Right. And the problem is, most wouldn't define them as great. Most would define them as it's been okay, getting through each year. But unfortunately, it's going to feel very similar to 2008, and that's probably what's around the corner.
Wow. You think 2008 is around the corner?
Yeah. unfortunately. And what I say that because if you look at the jobs reports that have been coming out now since September of 24, they've been getting worse and worse and worse. The revisions have been getting worse and worse. And essentially, with less jobs, it means less money in the economy, less demand, more supply. Prices come down.
I mean, is this a time at all to take advantage of the market, or do you think it's still going down?
So, you can make money in the market going down, you can make money in the market going up. The best one to advise on that is someone that has a securities license and is seasoned in the business.
Mhm.
Um, what the biggest mistake that you can do right now is just assuming everything is fine. Assuming that time in the market is better than time out of the market, meaning that the longer you're in, the better you're going to do. People that lost their retirement in 2008, it took them the entire duration up until about 2021 to make back just to break even. So,
Oh,
in the event we're going through another cycle, the last thing you want to do is just put blinders on and let it coast. You really want to sit down with that financial advisor, call them, and don't do it on Thursday because Thursday everyone's calling. You really want to try and get ahead of these reports that are coming out tomorrow because you really want to have that conversation of, okay, what is plan A? What's plan B? Good or bad? What are we doing? Because if you're closer to retirement, then you want a lower risk profile. If you've got 25, 35 years still to go, you might be able to accept a little bit more risk and go after some more of those risky investments. The last thing you want to do right now is be on an autopilot.